Trump.
Oh, great idea. Not. What was exciting about yesterday in the markets on close? Because we went early.
Yeah, I listened to Tone this morning, and he's very, very excited about the stock market. He was very surprised about gold's move yesterday. Everybody should listen to his. It was a very brief overview this morning, but I think he might be joining us, which would be fun today.
Yeah, we'll see when he jumps in. He's going to be an attendee just like you guys, but hopefully put some crazy Q&As. You're not able to hear us? Really? Everybody? All good. Oh, okay. There we go. Thanks, guys. If it ever happens during the show, just let us know.
How's the volume?
Tone's on. I can hear you just fine. That's good.
Great.
We have DJ Tone. I think they're in beautiful places right now.
Yeah. Tone is over in Bangkok, I think.
Ooh. Nice. That means he's probably going to be with Van Zen soon.
He said
Really?
Western Bangkok, and he wishes he was in Central or Eastern Bangkok. I've never been to Bangkok, so I have no idea what he's talking about.
Hey, Tone, you should tell us what you're talking about. Neither have I. Ooh, we have a minute. I don't even know what to ask. Did you have enough coffee? Because we're in for the long haul today.
I don't, but I do have water.
Oh, that's a good idea. That's much healthier.
Wow, Socrates' charts are fabulous. Everybody's going to love these charts.
All right. You ready, Mr. Ty?
I certainly am.
Oh, what is this? I'm waiting for the clock to like march down 10 seconds. Boom, bada. Boom, bada. Boom, bada. Man. Hi, Ivan. Man. Yeah, the charts are really cool. Hey, Ty, it's cutting off your head. And it's noon. All right, now I'm going to start recording.
Okay, good.
Ready? Boom, recording. Hello, everybody, and thank you so much for joining us on this. And quick reminder to begin with, yes, you are going to get the videos of this later. It is recording. So if you guys have to go to your son's Little League game or get hungry, anything you want, just so you know, you will get these later for sure. We are going to have a lot of fun today for sure. And Q&A, please throw it into the Q&A. It's going to be great. We're going to get to it at the end. And we will pretty much stay here as long as you want until Sunday in the next webinar, answering as many as we possibly can until, I don't know, our eyes start bleeding. But I will send it straight to Ty. Today, everybody, thank you so much for Vegas, just saying, for attending and giving us such great feedback. So the webinar today, Tyler's been tweaking all week, and hopefully it's fantastic. All right. Hello, Ty.
Hello. Thank you all for joining. This is very exciting for Leah and myself. We loved Vegas. We loved being in front of a group of people. What we found is I'm easily distracted. And so I went off on many tangents away from the agenda. We're not going to do that this time. What I would suggest is have pencil and paper ready so that if you hear something that you have a question about or is interesting, just jot down the time and the subject matter so you can go back to it a later time without having to go through the entire presentation. We're going to cover a lot of very specific charts even today. A lot of the people from the Vegas seminar signed up, but they're going to come on tomorrow because they've heard the introductory part. Unfortunately, I've changed things around. We're going to actually look at over a dozen current hyperwaves today, but not analyzing them from an investment point of view, but simply showing them as evidence to this thing that we call a hyperwave, to make it more real in your mind. And that's going to be fun for all of us. Be sure to write down the tickers as I go through these so that you can explore each of these on your own. We're going to look at phase 1s, 2s, 3s, 4s, 5s, 6s, and 7s, all of which are current today. You can trade all of these. Then tomorrow we're going to go into much more detail at a bunch more charts of current hyperwaves, and we are going to go through various techniques in trading them. Before we get to that level, though, we're going to spend the first hour and a half, and then we're going to take a very short break every hour and a half or so to let everybody kind of absorb things, get up and stretch, and then we'll get right back to it. There's far more information in the next 8 hours than we can pack into the next 8 hours. And some of the comments that we heard back from people basically said we should make this a 2-day full seminar, which would allow me to go off on my tangents that some people like to hear because they're anecdotal. They're things having to do with how, when, why I made certain observations and decisions. We're not going to spend very much time on that today. We just don't have the time to do it. So with all of that, I'm going to pull up a chart that I hope everyone has seen many times. It's one that was drawn by hand back in almost 40 years ago, exactly 1979, which is the archetype hyperwave. And I will keep bringing that up as I go through examples. What we're going to do in this first hour and a half is we are going to go back and look at historical examples. But I'm going to show you charts you've never seen before for those that have listened to most of our vlogs. You will see some charts that are familiar from the 1920s and 30s. But I've added on top of that something that someone asked me about and I hadn't really considered, which is what happens when a hyperwave gets back to its terminal point, phase 1? What happens to the underlying index or commodity or security or currency in the next 20 years after that? And I've got charts on all of those also, mainly to help the crypto people, many of which are here with us today. But there are many people in the audience that are more interested in the theory and the technique across all markets, not just crypto. But what we're all wondering about is if it turns out that we go back to 1,000, and you can each make your own decision after you look at all the charts we're going to look at, what happens? What typically happens? What we do know is something that's gone through a full hyperwave cycle does not disappear. Some of them go right back into other hyperwaves. Very few, but some of them do. Some of them will go for years and years and years and not do anything. They're so despondent of what looked like such a great thing happening for their company or their index or their currency that it takes years to recover when you get to the bottom side of the hyperwave. So that's what we're going to be doing for the next hour and a half. And then we're going to come back for another hour and a half. And we're going to look at current hyperwaves, given what we've gone through in the first hour and a half. And so to do that, let me pull up Let me pull up this one. Okay. And this one. And now I'm going to go here. And here. And here. Okay.
And the present at the top with the play button.
Of
Yeah.
course.
You're so smart. Have fun.
Well, I wouldn't go that far. Okay. What we are looking at is a complete hyperwave. And it's made up of 7 phases, but we will refer back to this chart over and over as we look at actual hyperwaves. Now, I thought about this a lot last night. And what you've got to understand is this is not price. 1, 2, 3, 4, 5, 6, 7 is not price. And I don't want to get too esoteric here, but this is actually a shape. It's made up of 3 sub-shapes. The first is phase 1, and then we've got a shape that's 2, 3, and 4. If you can mentally separate those 2, and I was going to break them apart and just show you a phase 1 and then another chart with just 2, 3, 4. And then there's one more shape that is 5, 6, and 7. And 7 returns back to phase 1. But remember, this is not price. What this is this is a structure that will contain price. And that's what makes hyperwaves so unusual. Because this basic structure will do 2 things. Phase 1, 5, and 7 will be ceilings above which price refuses to go. And 2, 3, 4, and 6 are floors below which price refuses to go. Now, if you try to put all of that together just conceptually, what the heck is this thing? That it takes on a particular shape. In Vegas, we pulled up a short video of the construction from water droplets into snowflakes, in which the snowflakes developed very slowly and then all of a sudden took on this shape that had 6 sides on it. And I use that as a metaphor for what you're looking at now. Why this particular shape that has these particular characteristics, I have no idea. But it's important to understand that this is not like moving averages in which they are calculated by price. Before a hyperwave even forms, this is what it's going to look like when it ends. And price is going to do all kinds of wild things below this 1, above this 2, above this 3, above this 4, below this 5, above this 6, and then below the 7. But here's the thing, you know that before the hyperwave forms. Show me some other technical system in which prior to the beginning of the move, you know exactly the shape it's going to take. Now, I'm going to throw on one other thing, which I have no answer for, but I hope those of you that have looked into Hyperwave, such as the 50 some odd people in our Hyperwave research group, have asked themselves the same question, which is, what in the heck are the vertices between each of the phases? This is the thing that distinguishes Hyperwave from bubble theory or from the human behavioral aspects of bubble charts you've seen, like the Wall Street cheat sheet, that use curves as opposed to vertices. A vertex is a point. It is not an area. It is one point between two lines that determine the next movement of price in such a way that at the moment that vertex occurs, price following that is going to respect lines that are drawn between the vertices. That is predetermined before price ever gets moving. And it's only after we draw 1 to 2 and 2 to 3 that we know what the angle that is already predetermined is going to be. Now, that's philosophical, it's academic, but it's very important to keep in mind as we go through the charts we are going to go through. So, here is the same thing you just looked at. This is the biggest hyperwave I have found. That doesn't mean it's the biggest hyperwave there has ever been. But this is 80 years long. This is the 30-year T-bond yield from 1942 to the present. I have not drawn in the waves because I want you to be able to start picturing these without seeing the lines. What you will notice, just as with snowflakes, is no two are the same, but they've all got similar characteristics, almost identical characteristics. What you're looking at here are the identical characteristics. However, the size of the phase 5 drop, how far down it goes relative to the 3, the size of the phase 6 move back up relative to the 4. All of these are different for every hyperwave, but the intrinsic structure always remains the same. Now, you will also find me admitting by tomorrow afternoon that what I thought was perfection turns out not to be, in terms of 2 rules that we will go over later. We have found hyperwaves in which the 6 got above the 4, or I will say hyperwave, and we're going to show that tomorrow. We've also seen a number of examples where 7 does not go to 1, and I've got some statistics on that. Those of you that have listened to us know there's 2 types of things called funky hyperwaves, and we're going to get into a lot more detail there. But we've also found an example or 2 where the phase 7 does not make it back to the phase 1. It does break the 3, it does break the 2, and it does not return. And I almost hate to show the example because I think it will get a lot of Bitcoiners excited about the possibility that I'm wrong going back down to 1,000. And I think that is a misplaced optimism because of the number of counter examples that I have against it. But in any case, let's go back and just look quickly at that. Here is the phase one back here. You want, whenever you're looking at a phase one, is to run over to the end of a chart that is finished and make sure you got back below that phase one, which you did. Now, you only did that a couple of years ago, 3 years ago, when you finally broke down below these lows, which ended the hyperwave. Let's take a look now at some old charts. And again, I'm not drawing lines because here's what you want to keep in mind. One is going to go sideways, and it's horizontal. It's not down 5 degrees or up 5 degrees. It's perfectly horizontal, which makes it easy to run back over to the phase one to make sure that you have reached the terminal level. And then you've got 3 up waves, 2, 3, and 4, a down 5, an up 6, and a down 7. Okay. This is Allied Chemical and Dyes. You can't see the dates on the bottom. Doesn't matter to me. I've looked at these charts so many, I'll tell you what it is. This is the 1920s. This is 1929, 28, 27, 26, 25, and 24. The one occurs all the way back up until 1922, and it ran anywhere from 1908 to 1914, all the way to 1922, on all of these charts you're about to see. So very long phase ones, then phase twos, phase threes, accelerating up to phase 4, phase 5 down, phase 6, phase 7 back to the terminal point. You see a little bit over here, some interesting stuff going on from the bottom in 32 and 33 into 34 and 35. All of a sudden, once you get down to the bottom, you see you can just kind of drift sideways. I'm going to skip every other chart because every other chart that we're going to look at now is going to be from the period of 1929 all the way to 1960. And the reason I'm showing you that is I want to show you what happens when a hyperwave gets back to its terminal level. I'll show you examples where it goes right back up into another hyperwave, but I'll show you many, many more examples where it does not. This is Alice Chalmers, the same as today. You can see the angles as they're getting higher and higher, and then finally the run up to the top. You want to take quick looks at just the amplitudes on these, and you can always go back. These are monthly charts, unfortunately, because that's all that's available back in the 1920s and 30s and from very few sources. If anybody can find historical charts that show weekly prices, I would be much indebted. I've spent 40 years looking for them, but maybe someone can find something that I haven't seen. In this case, we see a run from 10 to 80, or an 8x move. That's about average for all hyperwaves. Some of the bigger ones have moved 40x, some of the smaller ones only 4 or 5x. Most of them are between 8 and 20x. What I stress to everybody is the time element. This does not occur over short periods of time. Those are bubbles. We'll get into a deep discussion of the crypto world and certain things like individual stocks and very volatile, illiquid securities such as mining shares that can do all 7 phases in a much shorter period of time. I've never seen any as short as what we saw in Bitcoin, including the amplitude in terms of how big it was. And that was what really pulled me into doing all the work that Lee and I have been doing. Okay, that's Alice Chalmers. This is American Can. I'm going to skip that one because it's missing the first part of it. This is Anaconda. Anaconda is a copper company. It's still around today. You'll notice the examples I'm using are not all specific to any one sector or industry. Here we have a very small hyperwave relative to its amplitude, but the time is the same as all the other ones. And what I want you to look at as we're looking at these charts is the run up, the pullback on the 5 and the 6, always coming in lower than the 4 was before you start dropping down again and again until you get down to the terminal point. And then we will take a look at the longer periods of time. Here's AT&T. Here's Bethlehem Steel. Another short one in terms of amplitude. We're basically going, when you go further over on the chart, which I did not include in this, there was a 1 at 20. So basically I'm looking at 20 to 140 or about a 7x. If you consider this to be the one, which is also possible, and we're going to talk about how you draw the phase lines and what happens when you get a double 1 where you've got a lower 1 earlier that breaks up into a 2, but then you develop another 1. We've seen 2 or 3 cases of that. But with Bethlehem Steel, basically we've got to move from 20 up to 140 before returning back below 20. This is Chrysler Corporation. It had some funny stuff going on, partly because of the split back in 1925. But what was interesting is we came right back down to this angle before it started all the way back up to an acceleration up to the top. Here, there's really almost no 5 and 6. If this is 7, and again, we're looking at monthlies, which makes it difficult, it's possible that what we had in between these two on a weekly basis was a sharp drop down in the first month and then back to this candle, which did not make it back to the top. Other than that, this is a very strange looking one. It did exactly what it should, came back below the original point before taking off. This one began to move fairly quickly from the bottom. You will see that a number of these in 1937, which isn't shown on this chart, but will be shown on the next chart, got hit very hard again in 1937. We went into a deep recession and the stock market dropped very sharply. This one comes very close after the drop into taking out the highs, but it doesn't do it. Also, this one to me looks like it's a funky hyperwave holding 2 without getting back down. It's difficult to tell on this chart. Once again, we're looking at monthlies, but I think this is the first actual funky hyperwave that I've seen, and I didn't recognize what that was until 1990. After looking at many of these charts before, I went back and I pulled this Dow Chemical one up. The reason I like this chart is if this is indeed a funky hyperwave, holding on to 2 and not returning down to what was about 5 on the original chart, Notice this stuff gets a little bit complicated because of splits along the way. There's a 5-for-1 split in 1929, and then another split, 50% stock dividend and split in 1934. I'm not sure how they adjusted their charts back then. Today we know how to handle all of that, but in any case, I like this. I like that immediately following the bottom on Dow Chemical, we went straight up above the high in 1929, and we kept going. We'll have to look at the next chart to see what happened after that. In fact, I will pull that one up. This is the period we're talking about. This is 1929, 30, 31, 32, 33, 34, 35, 36, and 37. Then we had this very sharp drop in 1937, but look what happened to Dow Chemical afterwards. After about a 10-year period, going into the early 1940s, 50s, it took off again on this tremendous run. It's one of the very few from the 1920s and 30s that shows that kind of action. And I suspect it might have something to do with what I pointed out about, I think this is a funky hyperwave, which those of you who haven't listened to other vlogs, I will explain later what that means. It just means that an original phase 2 or 3 is not broken. The 3 is broken here, but it looks to me as if the 2 holds here. And then we get a tremendous move, very different than all the hyperwaves of the 1932s and 1930s and 1920s. So that gives all of us some hope that maybe some of the things that we will look at tomorrow and later this afternoon in terms of hyperwaves that are going on right now, I'm going to show you a number of examples of funky hyperwaves that have now gone much higher than they were before, and we're still in phase 3s or 4s of those. And then somebody can try to figure out why, what's the fundamentals behind these differences. Here's General Electric. That's about as perfect of a hyperwave as you're going to find in terms of easily identified phase 2s, 3s, 4s, 5s, 6s, not making it back up to the top, 7s all the way down in 1932. It does not go up like Dow Chemical did. It does like all the others, kind of drifting higher up into 1937. International Telephone, IT&T, which then later became a huge conglomerate in the 1960s and 70s before it was all taken apart again in the 1980s and 1990s. But very sharp drop. If this is a 5, that's unusually large. Look at the size of this from basically below 10 up to 150. This is close to a 15x, followed by a tremendous drop that goes from 150 down to below, it looks like right around the 50 mark, 2/3 drop. This isn't much of a 6. Maybe this whole area could be considered a 6. Once again, if this candle was broken into 4 weeklies, maybe we could see it a little clearer, but it didn't matter anyway. The 7 wins out, as it almost always does, and takes you way back down below the lows in 32. This one, after dropping from 150 down to 5, 97% drop, just went sideways for years. Let's just take a quick look at what it did. Yeah, look how long. This is the 29 drop over here, 29 peak, 1929 drop. This is 1960 at this side of the chart. It has not yet gotten back to its peak. Almost all of the others we're looking at returned to their peaks somewhere around 1953 and 1954 for very good reason. And the reason is because that's when the Dow Jones Industrial finally got back to its 1929 high. You've probably seen me refer to the Dow Jones Industrials Hyperwave in the 1920s. I'm not showing that. What I'm showing are components of the Dow and other big indexes like the S&P. The S&P didn't come along till 1926. So many of the stocks that are in the S&P from 26 to 29, I don't have the record of how they got to 1926 before the S&P was put together, which makes it difficult. Okay, here's Kennecott Copper. We looked at that before. And here's Kennecott Copper afterwards. I'm going to look at those in just a second. National T is very unusual because it went into what looks like a nested hyperwave. A lot of people looking at this say, wow, that looks a little bit like the Bitcoin chart, where you've got these nested bubbles along the way. You're holding an angle here. It's very difficult for me to say that all of this occurred above a phase 2 line before it began to accelerate up, because the top of this movement is higher than the next angles going up, particularly this angle. So this is a very difficult one to understand, but when it got to where it was going, which is basically at from $5 up to 100, it was a 20x move. Then it came down, and again, it's difficult to see where the 6 is, but I blame that on the fact that we're looking at monthly charts. National T later, in the same period of beginning of the 50s, got back up, but didn't really get back up close to its peak until years later. These are each years, obviously, and then finally went much higher. But again, took almost 2 decades after the fact to get there. Okay, what I'm going to do now is we're not going to look at these. What we are going to do is I'm going to stop sharing. I'm going to increase this. Okay. So what we just looked at is some very old hyperwaves that I found in the early 80s after I had first, by mistake, discovered Hyperwave, which you've all heard the story. I was looking at 2 charts next to each other and describing one of them to someone on the telephone. And after I hung up, I realized that I was on the wrong chart. I had just been explaining to them the movement of what I thought was a silver chart, and it turned out to be a sugar chart. The silver chart had been moved the night before, a couple of charts over, and they were so identical that I began wondering exactly what was behind 2 very dissimilar commodities, silver and sugar, that resulted in a very similar pattern. And so I spent a lot of time looking at commodities, and it was the perfect time to be looking at commodities because this is the 1970s. And remember, some of you remember the 70s. Most of you remember reading about the 70s. But from a macroeconomic point of view, the 70s were very unusual in US history. Number one, because we went off the gold standard in 1971. Actually, it was 1974, but Nixon closed the gold window in 1971, and the rest of the world caved in on Bretton Woods in 1973 and 1974. But the damage had been done, and we started a very high inflationary, high interest rate period from 1971 until 1980, 81, and 82. And inflation took off, and therefore commodity prices took off, including many, many commodities, cocoa and sugar and silver and oil. OPEC came together and held the world hostage to the supply of oil that they would let out, and oil boomed, which really exacerbated inflation. But it wasn't only that, it was that currencies began to, individual countries began to print money in an unprecedented fashion. The US began that process in 1961 and 62 under John F. Kennedy, and we started running non-wartime deficits for the first time basically in US history. It had occurred before, but every year following that, 62, 63, 64, we were running deficits, and the world rebelled against that because the US dollar and gold were the standards set up by Bretton Woods for all other currencies. And if the US was inflating its currency through deficits, that means that the dollar was diminishing in value relative to gold and other currencies. And that's what finally ended it in 71. We won't go into all the details, but it's important to note that that period in the 70s was very unusual, which was the perfect breeding ground for hyperwaves to develop. So I try to excuse myself after looking at all kinds of commodity waves that were taking place to the upside during those years. And I was new to this whole concept of hyperwaves, that I made that mistake. But in any case, I did make it. And I'm glad that I did, because it got me to explore all of these other things. Okay. I'm giving you that history because we're going to start looking later on, not in this period of time, but in the next segment, we're going to look at modern hyperwaves. People get tired of me showing old hyperwaves, but it's very important for me intellectually to know that the hyperwaves that I studied back in the 1920s and 30s have not changed in any way. And what I saw in the 1970s were consistent with what I had seen in the 20s and 30s. In the first case, we were talking about securities, pieces of paper that people had a certain amount of confidence in and were willing to buy or sell because they represented ownership in corporate America or in indexes of other securities. In the 1970s, securities weren't doing anything. They were in phase one of a hyperwave, which I didn't know at the time, that ran from 1965 to 1982. From 1965 until 1982, the Dow Jones Industrials could not get above 1,000 on the Dow. That's the perfect phase one of a hyperwave. Since then, we've run from 1,000 up to 26,000. We've got a 26x hyperwave that's still active. And it's made up of some nested hyperwaves along the way, which I did not recognize at the time. And I'll get into that later. But the point is, the 70s had hyperwaves in commodity prices because of inflation and because of the decoupling at a macroeconomic level of countries from any kind of a standard reserve. Now, what happened back in the 1920s, I consider as macroeconomic shifts also, because we were between two wars, World War I and World War II. We had the establishment of this central bank, Federal Reserve, back in 1912 and 1913. And we had what I did not know at the time. I didn't live back then, but I mean through my exploration of charts, we had a phase one of a hyperwave that ran from 1908 until 1922, 14-year phase one of a hyperwave. That later I found out when I looked from 1922 to 29 had a phase 2, 3, and 4 in it for the Dow, that then brought the Dow back down. Now, where was the phase one of the Dow Jones Industrials from 1908 to 1922? The answer is 100. 100 on the Dow Jones Industrials. And then when we finally got up to the peak at 388, we had moved from 40 at the bottom to 388. And then we went back down to $44 basically in 1932 and 1933, which completed the hyperwave. So contrasting that with what I just said about the period from 1965 to 1982, where the Dow couldn't get above 1,000, 10x of what it had been many, many decades earlier, we did have hyperwaves, but they weren't in securities. Those didn't come until later when we got into the 1990s, as the hyperwaves of the big indexes begin to take off. So the reason I'm giving you that background is, in my mind, I saw that hyperwaves were not things that had to do with individual stocks or companies, and they also didn't have to do only with individual commodities. And then later I realized it also happened in the fixed income market with the first chart that I showed you today, that is completely related to interest rates, not into securities or into commodities. Now, they're all interrelated in their own ways to big economic factors, but what I'm saying is this strange thing we are examining for the next couple of days, called a hyperwave, seems not to care what the underlying security or commodity or currency or index or sector or industry is about. The structure is in place before prices begin to move and restricts what is going to happen over the coming years before you go through the process. That became no more clearer to me than when I got the phone call about Bitcoin from my son saying, take a look at Bitcoin. It looks like it has the potential to go into a hyperwave. Now, that's a brand new asset class. What is it? Is it a commodity? Is it a currency? regulators are debating that on the cryptocurrencies. They're not debating it about Bitcoin. But what was interesting to me, that if he was right, and that's why I spent so much time in early 2017 thinking about all this, then here's another example which was then proven out after the fact of this structure being able to control the movement of even a new asset class. Now, what we're debating every day and week is, where's the price of Bitcoin going now? And people are saying, if it doesn't make it down to 1,000, then that just disproves Hyperwave. That's silly on the face of it. The fact that we clearly went into a 1, 2, 3, 4, 5, 6, and a 7 is enough for me to say that this is simply another example of a hyperwave. But since none of them are exactly the same, I leave open the possibility of what final shape it takes. That's why we're going to look at hyperwaves that did not do everything they were supposed to do. And we'll do that tomorrow. Okay, enough of the jabber. I want to go back and get back to the charts. We're at 1248, so that's perfect. And I am now going to do this. Where did I see that before? I saw it somewhere. Oh yeah, it's right here. And I'm going to go back to this. Okay, and then I'm going to go
Looks
back
good.
up. Okay, then I am not able to move that. There's a share thing on here somewhere. Oh wait, there we go. Kind of. See if that, there it is. Great. My great partner did something and fixed the problem, as she always does. Okay. There it is again. The question now is, what happens after phase 7 using these old-time examples? This one, we don't know. This is the one that I'm the most interested in because of our Medium article about what is about to happen, meaning over the next 10 or 20 years. Are we going to get Bitcoin up to $10 million? Or is Bitcoin going to go sideways because something else is going to take its place, namely gold, in which case is gold about to go to $25,000? If either of those take big moves after this yield enormous hyperwave took place, what will that look like? I said I don't want Bitcoin to go into another hyperwave. And the reason is, should be clear by now in terms of these screens, because there's a good part and a bad part to a hyperwave. And for Bitcoin to take a role on the world scene, we don't want it to run up to $100,000. Yeah, everybody says, yeah, we do want it to run up to 100,000. But if it does it in the form of a hyperwave, then we're going to go all the way back down to the beginning. That's what I don't want to see. Is gold, on the other hand, a commodity that had its own hyperwaves back in running from $35 at the beginning up to $850, which is a pretty good amplitude, over 20x. Is that ready to go from current levels up to $25,000, $20,000, some figure? So I'm learning along with you because of the enormity of all of these things coming together. And we will see that in the second session as we go through current hyperwaves. All of a sudden, hyperwaves or the financial markets have become target rich with hyperwaves. They are everywhere. Every day almost, someone is sending us a new hyperwave they have found. Not just from our research group, just people on Twitter and other places. More and more people have come to the conclusion these things are real, and they're starting to look for them, and then they're sending them into us, and we're trying to categorize them and catalog them. There are a huge number of them. I've never seen that before, other than during periods of tremendous upheaval in macroeconomics. Okay, here's allied chemical and dyes. We're just looking at what happens after the fact. You saw the hyperwaves. Here's Alice Chalmers. Didn't do a thing for the next 25, 30 years. American Can. Anaconda. Now, AT&T, interesting to me, did not get back up to its top, even as we got into the early 1950s. But people can kind of remember, maybe, as you got historically to the end of the 1950s, we've seen one chart of Dow Chemical that really took off. And you've got to put that in perspective with historically what was going on. Chemicals all of a sudden became enormous things. And after that, The Graduate, anybody that saw it and remembers it, plastics, and telecommunication began to become more and more important. And Japan was a driving force behind a lot of that. But the telephone companies started acting differently than the industrials and the railroads and the transports. Also in the 50s and following World War II, infrastructure became a big, big thing in the United States. Highways under Dwight Eisenhower. The system of highways we've got today basically came after World War II in the 50s and then into the 60s. So all of a sudden, you're going to see transportation take off. Car companies and trucking companies and railroads and all of the rest of it. So you've got to keep your mind open when you're looking at these charts. The different things happen at different times, and history tells you what they are. But what's impressing me when I was looking at these charts before Vegas and before, as I was putting these together for you today, is how destructive a hyperwave is after it's over to an asset class, a sector, an index. Tone and Murad and Venzen and a bunch of people that think there's still lower to go on Bitcoin and the cryptos, as I do, are beginning to debate how long can this period go for Bitcoin once it gets to whatever the terminal level is it's going to get. And these charts are important to understand that this funny thing called a hyperwave is great when you catch it early, but you've got to be prepared for what is going to come. And that's why I, along with Lee, have been so insistent for the last 14 months that the crypto sphere is not a place to have money parked, regardless of what you think about the bigger picture, until it at least gets to where it's going. Now, it's done a big portion of that already, so take that for what it's worth. Here's Bethlehem Steel. Remember what I said about the reconstruction, not only of Europe, but nothing really happened with the steel companies until the very end of the 50s going into the 60s. And then you began to get tremendous movement. Auto companies actually did fairly well. I mean, it's not huge, but kept moving up, lower or higher highs, higher lows, stalled out a little in the middle of the 1950s. And then 1958, 59 were tough. We had a big steel strike in 1959 with U.S. Steel, and it impacted the use of a lot of things. And once again, history becomes important. But again, you don't see any kind of tremendous move, even though the U.S. was building, spending. And the stock market did much, much better. Here's that Dow Chemical chart, which to me is fascinating. And then look what happened even later. This is 29, 30, 31, 32, 33, right up to higher highs. A lot of people, are hoping that that Bitcoin can do the same thing. I like the fact that there is no new one here. And if this is a funky hyperwave, there shouldn't be any period of a one. Because what this would mean is all of this action was above a phase 2 line, and this then became a phase 3. Now, to test that theory, you want to look at this chart. And because the scale is so different, it's very hard to tell. But from here, which is 34, it looks to me as if all of that is part of that phase 2. And this becomes a phase 3, which makes it an enormous hyperwave that we need to explore more. I only saw that last night, but that'll be something for people to look at. What did it do then in the 60s and the 70s? I've already told you that the stock market will take a big run from this point for the next 5 years, but then it will peak out and won't move for 17 years after it. So I'm very interested to see what Dow Chemical did. And then I would also like to pull out a lot of other chemical companies and see if that continued. Here's GE. I'm just fascinated by this one because of what happened, not in this chart, but in one we will show you later this afternoon with General Electric, that then went into another hyperwave and then cracked that one also. But that's almost the archetype of a hyperwave, as you can see, returning down to the bottom, and then in 36, 37, 38, 39, and on and on and on, even after this run up at the end of the 60s, didn't make it back up to its peak. IT&T, the same thing, almost exactly the same as what we saw with AT&T. I mean, General Electric. The General Electric chart over the next 30 years looks almost identical to the IT&T chart. Okay, Kennecott Copper. We're using steel, we're using copper. We've got higher highs, higher lows for a period of time, but nothing substantial relative to where it was back at the end of the 1920s. National T did take a big run up, starting in the mid and late 40s, early 50s. So variations in all of the examples, but general themes still very similar. Okay, we went over those very quickly. We've gone an hour. We haven't looked at any new hyperwaves, but what I've done is I've introduced the archetype. You should draw it yourself or pick out one of those charts that is very close to an archetypical hyperwave and just implant that so that when you start looking for these things, you will be able to identify them quickly and then start the analytics behind it before you ever start trying to trade it. Now, Socrates, who we introduced everyone to, those in the research group have known what a tremendous giving person he is. He spends an awful lot of time teaching people as well as doing his own original research. Has put together a bunch of charts for us today that we're going to look at, where we are going to look at actual phase one as they sit as of Friday's close. And then phase twos, some phase threes, phase fours. We're not going to be doing that from an analytical point of view, but I want to show you that each of the phases on current hyperwaves are precisely the same as what we saw back then. The great advantage we have today in studying these things is that we've got charting tools like TradingView and StockCharts.com, and even simple things like Bitcoin Wisdom that I love to analyze Bitcoin, which we never had before. We're relying on old hand-drawn charts, basically, from years ago. I've got some charts of the tulip mania, the tulip bubble, as well as the South Sea bubble. But those are hand-drawn charts that we just don't know what the data really looked like. The data is the important thing. And when you can get as precise as the charts you're going to look at after we take our break, where you can change the time frames, start at the monthlies and then go to the weeklies, and then all the way down to the dailies and the hourlies for the same thing, and know that the data is good. Unfortunately, we don't know that in the crypto market because of the nature of the exchange information, but we can come pretty darn close. And now we've got some indexes to play with. So that's all very helpful. But what I'm saying is, what this is about isn't about cryptocurrency and Bitcoin. This is about a tool that is, after 40 years, still just puzzles the heck out of me of what it really is, what it signifies, what it's telling us about how you and I react to movement of value, movement of price, but movement of intrinsic value over time, and how we keep getting sucked into making the same mistakes that people have for a century, even though we should know a lot better by now, because a lot of techniques like Elliott wave theory should have been definitive, saying that things move in predictable ways, but none as predictable as the one that I'm showing you now, as far as I know. I was thinking last night about, I'm trying to think of metaphors of what this shape is. It's clearly a bubble type of a shape. I don't mean that. But if I pressed you on what is a bubble in a financial market, because I've thought a lot about it for many, many years, yeah, maybe it's all human behavior, but wouldn't you think that after the 1800s, when McKay wrote his book on these delusions that we go through, that it wouldn't sink in at some point, and that you could overcome those behavioral tendencies? And Hyperwave says, no, not in any form or shape. We keep doing the exact same things. We get up through either a parabolic move on something, and we get more and more excited, not less and less. You should be getting less and less excited, not more and more. And as you are on the other side of a bubble, you should get more and more excited, not less and less. But we don't. Well, that's genetic. It's got to be deeply within our subconscious and conscious that we do those things. But it's embarrassing to look at hyperwaves, only because they're so predictable, so real. And we will look at that. But one of the metaphors I was thinking about, and I spent a lot of time in Vegas talking about this, and Socrates and Leah and I are working on a book on hyperwave that basically Socrates is doing all the writing on, and then we get together once a week and we go over it. We think about, what does this imply? What do we want to say? What do we don't want to say? And I keep going back to trying to describe this thing. Pardon me, but I'm going to do this again one more time. I am going to bring up the archetype. And we could do it on this one, as long as I don't mess anything up. That's good enough. Well, yeah, that's okay. Trying to describe this thing, yeah, we can say there's these 7 things, but I have tried for 40 years to get deeper into this thing, and the questions I have to do with when I found out about the fact that if you extend this phase 2, it becomes a very important asterisk on a hyperwave, because it opens the door for this thing called a funky hyperwave. It doesn't show up very well in this phase 3 because I've got it so sharp. If I was to redraw this, and I don't want to, because this came from my initial thought of how these things work. The phase 3 is awfully sharp here, which means if you extend the phase 3, it cuts way above the way I've got the 5 and the 6. And that's not the way phase 3s usually work. I would bring the phase 2 down a little bit, something below 45 degrees, and I'd make the phase 3 something above 45 degrees. And then if you extend the phase 3, it's very rare for the phase 5 to get down below that. And it offers an opportunity for the phase 3 to hold and then create a funky hyperwave, like I think we just saw with Dow Chemical. But that's all icing on the cake. The important questions are, why is it, or how is it, that this phase 1 is so important to so many hyperwaves? Why is it that on some, 1 out of 5 approximately of hyperwaves do end up holding a phase 2, very few phase 3, but let's lump them together and say phase 2s and phase 3s, about 20%, 1 in 5, that then go on and don't go down into a lower phase 7, but then start going up and take out the old phase 4s. Is there something that is similar between those that we're missing? Because there's so few of them, we don't have the ability to compare them all because there's so few of them. But the other big question is these things, these vertexes. And it's not clear on a hand-drawn archetype. It will become very clear in our session after we take a break, when we look at current hyperwaves very precisely drawn on how many times on a weekly basis price will come to these lines, 2, 3, and 4, penetrate them during the week, and then close at or above them, and then continue higher. My explanation to myself over the years has been, well, because these are trend lines, and therefore trend lines will tend to hold. That's not sufficient. That is not a sufficient explanation, and I will show you why as we get into a number of charts this afternoon. So with that, I am going to get back out of here, and it's about 1:15, so we will take a short break and then reconvene in about 5 or 10 minutes. And back to my very talented partner.
Thanks, Ty. All right. Thank you, guys. We will reconvene very soon, just as Tyler said. Grab some water, whatever you want to do, and see you very soon.